Hello and welcome to this episode of What's on My Mind with Kaleb Paddock. I'm Kaleb Paddock, the founder of 10 Talents Financial Planning. Hey, thanks so much for tuning in today. What's on my mind is the stock market and the wild ride we've had, specifically this situation that's really developed almost in textbook style called the double bind scenario. And so the double bind is, in February and March, the perception is this is a bad time to invest. Got a pandemic going on, the market is in a free fall, so you tell yourself, I'm not investing, bad stuff is going on. I don't want to invest and then immediately see my account value go down in the next week, month, quarter, etc. So you wait. Seems like the right thing to do. Then you have what we've had happen over the last 4 months, which is the market just rapidly increasing. But there's still fear, right? There's still a pandemic going on. So you say, no, I'm going to wait to get back in because there'll be another drop coming. And each month, each quarter, the market continues to rise. And you don't use this as a positive sign. You use this to reinforce your fears. You say, well, it's going up very rapidly. It'll go down really rapidly again. I'm going to wait for that. I'm going to wait for March to happen again. I'm waiting for February, March to happen again. Then I'll get in, once I can feel comfortable with the bottom, when I know it's the bottom. And so now you're still on the sidelines. The everyday increase or the every week increase is not providing confidence that you can get back in. It's providing, again, fear that, oh no, I'm buying in at all-time highs. Again, it's too expensive. I'll stay back. So you see the double bind. The double bind is when things are really bad. I'm not staying away. This doesn't look good. It could go down farther, right? It's bad. It could get worse. On the flip side, the markets begin to rise. There's still bad news, so I'm not going to get in because this is fake. This will eventually plummet again, and I don't want. So inertia ensues. And so the solution, what is the solution to the double bind? The solution is you have to have a predetermined plan and a predetermined target for your overall investment so that when we get pandemic style drops in February and March, you have discipline to buy low and sell high to rebalance your portfolio back to its target. And now, as we approach all-time highs again, you have to have the discipline to take gains, rebalance back to that target. But you have to have a target. You have to have a plan. You have to know what you're spending. And if you're in retirement or approaching retirement, you got to know what amount of this portfolio do I need to live off of, and what amount is it okay to have kind of riding the waves, but not as part of my monthly income. So this double bind is kind of playing itself out. You may have felt this way. I mean, many people have felt this way over the last 7 months since the beginning of 2020 is don't want to get in now. Okay, things look better, but don't want to get in now. And so you do face this double bind scenario. And so I just encourage you to you got to create a framework for yourself. You got to create a framework that pierces through the double bind scenario and breaks you free from this kind of emotional roller coaster. So I hope that's helpful for you. Would love to hear your thoughts on if you have other frameworks that you like to use. But thank you for tuning in to this episode of What's on My Mind, and I look forward to seeing you here again soon. All right, bye now.